Well, hey there. I'm Kimberly Ferguson, CEO and founder of Emerald Expectations Accounting. I'm so happy that you're here. Your Emerald Corner is a place where life and business meet. So I want to share with you the process of running a business while maintaining a life with your loved ones. Today's video is another in our series called Tax Tip Tuesday, where we talk about all things tax. So answer your questions, talk about what definitions are, and all that good stuff. So if you have any specific tax questions that you would like me to answer, please drop them in the comments below. So today's video is kind of a spin-off of last week's video. So if you missed that, go ahead and grab it right up there. But that video was all about self-employment taxes. So what self-employment taxes are, who has to pay them, when do you have to pay them, all that fun stuff. So this video is all about whether or not you should pay those taxes on a quarterly basis, or if it's better for you to just pay them all at once on April 15th, right? So this question is a little bit of a tricky one to answer, so let me just start by saying it depends. It depends on your specific tax situation, right? But the short answer is yes, you should pay them on a quarterly basis. So if you take a look at your income minus your expenses and you see a number that's not in the negative and it's not zero, that means that you made a profit, right? And if you made a profit, as we discussed in our last video, then you will have to pay self-employment taxes. So even if maybe you're not going to have to pay income taxes on that amount, you still will have to pay self-employment tax. So you definitely want to pay that amount on the quarter, if nothing else, because the way that the IRS looks at it is that you are supposed to pay your taxes during the tax year. So 2023, for example, you're not supposed to wait until 2024 on April 15th to pay your taxes. You're technically supposed to pay them in the year that they're incurred, right? So if you don't pay them on a quarterly basis, like they recommend you do, they're going to charge you interest. They're going to charge you penalties. So basically, if you're doing this to try to avoid paying taxes, you're just going to end up actually paying them more, unfortunately. So it's better to go ahead and get some estimates done, or do your best to estimate it and then pay that amount in on the quarters, then wait until the end of the year. Now, the tricky part is they're technically not due on the quarter. They have to make things a little bit tricky, right? So you have April 15th, you have June 15th, then you have September 15th, and then you have January 15th of the next year. So that's a little confusing, especially because I just said that they want you to pay the tax in the tax year, but the last quarter payment is due on 1/15. So 1/15 and 4/15 are a little bit off kilter, but those are the due dates. So as always, if you have any specific tax questions that you would like me to answer on my future episodes, please leave those in the comments below. And thank you so much for spending a little bit of time with me today. I hope that you have a fantastic day, and I will see you in my next video.